Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that overall buyers maintained control and held up ES pretty well. Heading into the open, we have the 2099 high volume node as a reference point and the 95 to 97 area initial support. And below that, we'll be using 90 to 93 as the bull bear zone. So as long as ES is holding above 90 to 93, the buy side still has a shot at maintaining control, but ideally, we actually hold above 95 to 97 and not really even go down and retest that area, because just even heading down to 90 to 93 would be a sign of weakness. So ideally, ES actually holds above 95 to 97 and from there above the 2099 high volume node, and we can get a upside move up to the 2110 naked VPOC and the 11.5 to 13.5 initial resistance zone. So the upside scenario, as long as ES can remain above initial support, above the 2099 high volume node, would be targeting a move up towards the 2110 naked VPOC and 11.5 to 13.5 initial resistance zone. That's still a spot where sellers can be active on first test, but if we're going up there on strong momentum or we have balanced ahead of that zone, then even 11.5 to 13.5 doesn't necessarily have to completely hold. That's something we'll have to gauge as the market approaches it, but that is the valid resistance above 04 to 06. On the downside, in the event that we start failing at 95 to 97 and then we fail at 90 to 93, that could actually shift control from the buy side to the sell side again, and we could get a move back down towards 79.75 to 81.75. That's still a spot that buyers can defend on first test, but holding below 90 to 93 would signal continued weakness, and eventually we can then even make our way down to 74 to 76. And if we're going down on high volume and high momentum, even 68 quarter, 70 quarter. Recently we are trading in a higher volatility environment. Overnight the volume has been lighter and below average, so we'll just have to gauge once the market opens to see what kind of momentum and volume we're seeing in the market. If we're running on above average volume, then we know that we can still see a decent sized range on the day time frame. And if the volume is relatively light and below average, then it would be indicative of more of a balanced market where buyers can be active on every pullback into support and sellers can be active on first test of the resistance zones above. But looking at the other markets so far, the buy side is maintaining control, so we do still want to give edge to the buy side until we see some clear signs of failure and clear signs of weakness. So if we're failing at 95, 97 on strong downside momentum and negative internals, negative AD, and again 90 to 93 is really the major inflection point in the short term here. And if we can even hold above that, there's still a possibility that buyers can maintain control and we can simply balance above 90 to 93. So how the market reacts to 95, 97 and 90, 93 is going to help us determine the intraday bias on the day time frame today. Bigger picture, as I mentioned yesterday, we're still trading within a big balance, and because of that, we do have to be very flexible and nimble with our intraday bias. So as we get more information, as we see kind of which side is really dominant and pressing, we have to take that into account and adjust our bias accordingly. But really the primary areas today are going to be 90, 93, and 95, 97, and then 2099 high volume node is going to be key on the upside. And if we're holding above it, then we know that buyers are actually stepping in, and there is potential for a breakout and a move back up to 2110 and 11.5 to 13.5. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control at 95, 97 and 90, 93. That'll set the bias for the day, and we'll take it from there.